Hey everyone, so I wanted to do this video here quickly. I've got so much other paperwork to do to be able to get out of town. But I want you to understand that you can now start shorting everything in sight. The dark days are upon us from a market perspective. Let me point out exactly what's going on here. So here we're looking at Meta. And Meta has broken down. We're looking at the N column here. As soon as it turned red, that was breaking down. Notice how it had these 3 green days here, but it couldn't break out. That was a test with volume coming into it. And we did have the price move a little bit, 303, but then it broke back down. That tells us that Meta is going further lower. Okay? Now, if we look at this trend line and we say 0.8358, we go back to our calculator here, 0.8358, and we divide that by 0.8320, back down to our calculator, 0.8320 equals, we're looking for a 4.567% drop. 4.567, 4567. That's my birth date, 4567. So we're looking for a 4.567% drop. From the pricing point, that was 316.56. So let's write that down quickly so I don't forget it. 4.567. I don't know how I would forget that, but it's just my ADHD speaking there. So from this price point where we're at, 316.56, let's punch that back into our handy dandy computer, 316.56 by 4.567%, $14.45 drop, minus, so we're looking for Meta to drop to $302.10 on this mathematical move. Now, if we look at where we're at 301.95. We're underneath. We closed underneath what we were expecting Meta to do. And then we also printed a negative 24 after these 3 strong days. We were thinking that because we had some volume coming in, that Meta would meet its bottom and then start doing something. It hasn't. It's continued to keep going down. And the data sets are getting worse and worse and worse every day. Okay? Now, the other thought process that we have is, since Meta has broken down, how much lower could it go? So in that case, what we're going to do is we're going to come over and we're going to look at our breakdown, and we're going to say 1.0118 divided by 0.9933. 0.9933 equals 18.62%. So we're going to write that down, 18.62%. 18.62% from this drop, 316.56 by 18.62%, $58. So Meta could, in this economic downturn, could drop to 257.61, 257.61. Now, I'm going to come back and I'm going to put that target in here. 257.61 goes into my spreadsheet as my potential drop 2. Now, we're going to have some strength come back in. There will be. It won't be a steady drop to 257.61. But 257.61 is now baked into the cards. If we look at all of our other stocks here too, bear with me. Here is American Express. It's broken down. If we look at our columns here, we have it breaking down. This should not be yellow. Whoops. Don't What just what's going on? Oh, my elbow. Sorry, folks. I don't know how I shrink it now. Darn it. That's the problem with doing this, is I don't know how. Oh, maybe it's down here. Hang on. Yeah, there. I think I'm going smaller. Yeah, I'm going smaller. Where am I at here? That's Meta. So scroll up. Sorry for the technical problem. Here's American Express. American Express was 168, 169. It's now 161. Where's American Express breaking down to? So this should be red. That shouldn't be yellow at all, because there's nothing yellow about that. Let's paint that red. Missed that. But we have 0.49, so it's just starting to break down. This can be yellow, because 49 is not a bad number, but it's cautionary. Okay? We had a 4-point drop today in American Express, and we've broken down. So we're no longer, we're looking at this particular column. We've only had a few green days in this gain in American Express. So now what we're going to start hearing about is we're going to start hearing about how Americans are so far behind in their credit card payments, and unsecured credit cards are going, the balances on unsecured credit cards are going through the roof. There's more and more, and we're starting to read that. I just read an article about how more of our young people are dependent upon credit cards for making ends meet. Here's Oxy, here's oil. So what's going on with oil? Again here, Oxy, we're looking at this column here. Oxy has broken down 0.9998 just into a caution. But again, it printed negative. So Oxy is breaking down 63.55. Now, where could it break down to? Its initial stop is about 61.85, 63.55, 61.85. Oil is starting to break down. Okay, we can't buy oil. There's no safety there. Here's Microsoft. Looking at Microsoft, if we cross over, look at how Microsoft has been breaking down. There's absolutely nothing to support Microsoft. So 330, 338, 320, it's breaking down from where it was. If we look at this potential breakdown on Microsoft, we see that the breakdown's been going on since the 26th of July, just before August started. And then we see that the data sets are getting worse and worse and worse. 0.8301, 0.9881, and we're negative. These should be red. These shouldn't be green. Sorry, I haven't finished all of my painting and stuff. It's very difficult because after my second round of COVID, my finger control is not as good as what it used to be, my dexterity. Here's Apple. Is there anything going on with Apple? No, Apple's completely broken down as well too, 9742. There's absolutely nothing. Apple has broken down at the 1st of August. And Apple is simply going lower and lower and lower. Okay? And then its data sets just kind of suck. We had the 3-up days, and then today's day was down. Look for Apple to go lower than 177.45. We look at Boeing. So the industrials had been holding up very well. Okay? Industrials had been holding up. That's what the Dow was supporting. See this from here, the 24th of July, money was going into the industrials all the way down through this column. Then all of a sudden we got this yellow day, green day, but a big red, 98.62. That is a massive red day because Boeing, when we look at what its price has done, has dropped $4, 236.30, 232.30. That's $4. And our data sets are not good at all. Boeing is confirmed to have broken down. You can short Boeing now. Where is Boeing going to? In the initial prognosis, look at it to 211.80, 211.80. So if we think about the math here, let's take 0.8333, divide that by 0.8314. We're looking for a 2.2% drop in Boeing from 236 by 2.2% minus, so we're looking for 230.80. 230.80 is our very first step in Boeing. But then if we look at this massive breakdown, this was a massive breakdown, 0010 divided by 0.9862, we're looking for a 15% drop in Boeing, 236 by 15% minus Boeing down to $200 a share. 200.60 is where we're looking for Boeing to drop to. You can now short Boeing. Now it's not going to go there right away, probably, hopefully not, because that would spell disaster for the market. But that gives you about a 15% drop in the Dow from here. The Dow is currently about 34,000, about 34,800 by 15% minus 29,580 Dow. Lastly, if we go over, or not lastly, but there's a couple more. CAT is the next one after Amazon. If we look at Amazon, Amazon is still strong. Right? So the consumer is still strong. People buying on Amazon because Amazon is the #1 retailer in the United States. But it did print this red 9807. It printed a -29, which is one of the highest negatives that it's printed since back on July 27th, when the price was 128, and now the price is 137. Because we are starting to break down in Amazon, I look for this column to start turning negative, and that will be Amazon's signature that it is breaking down. Right now, what are we looking for from a drop in Amazon? 1.0225 divided by, in the worst case scenario, 1.0028. We're looking for worst case scenario, 19.6 from 139 by 19.6% minus $111.74, 111.74. So I'm going to punch that into the spreadsheet here. That's what we're expecting on Amazon. Can you go ahead and short Amazon yet? I wouldn't, because we still have this green column. Amazon can still bounce back. However, the big gains or the big money is going to be made in shorting Amazon at some point in time. We know that. Now, if we look at CAT, it's another industrial. All of a sudden, our industrial has rolled over. Industrials were doing fine. This column doing green, 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 green. All of a sudden, CAT today posts a 9805 and breaks confirmed breakdown. You can go ahead and short CAT here. And where's CAT going to? At least 257.65, 257.65, a 20-point drop in CAT. And when we look at the data sets here, with this 9805 breakdown, and we just do the math there, 1.0029 divided by 0.9805 is a 22.8% drop in CAT from 283. 283 by 22% minus. So we're looking at CAT dropping, which is where my mathematical model already is, $220 a share. So I have kind of a confirmation of what we're expecting CAT to do. So the industrials are rolling over, the techs are rolling over, all of the things that are going on in the stock market are rolling over, the dollar is rolling over, the 10-year note is now 4.22. So think about that. The 4.25 is a death cross for the 10-year and the stock market. And we have the 10-year note has moved from 3.99 to minus 4.22 to 4.22. It's moved 0.23%, a quarter of a percent in a week. That is staggering for the 10-year note. There is nobody that's talking about this stuff. The press is all, oh, happy days are here again. Everything is all good. There's nothing going on. There's nothing to see here, people. There's nothing to see here, people. And I am telling you, there is all kinds of crap coming our way because the data sets are weakening every single day and getting worse and worse and worse. There is nothing to save the stock market from here. We are in a confirmed downdraft in the stock market. You have my approval to start shorting and start running for the hills. Whatever is coming is not going to be good. The data sets show that we could have a 20% drop in the markets. We could have 15% drop in the Dow and about a 20 to 25% drop in the NASDAQ. That's not looking at the S&P 500. It should drop about the same as what the Dow would, about 15 points, 15%. That's currently 4,400. It's 4430, 4430 by 15% minus, we're sitting 3765 in the S&P 500. All of the other people that are talking about the markets all have a flat S&P 500 for the rest of the year. Everybody says, oh, the market's going to be flat. We're going to have a soft landing. That's what the press is all telling. There's going to be a soft landing. All the data sets are showing soft landing. I'm sorry, but I'm seeing no data set that is soft landing. I'm not seeing any of that at all. I'm seeing a 10-year that's going to be 5% here, probably by the end of the year, at the way in which it's growing. And so the borrowing cost of the United States of America with 1 trillion, think about that. I don't even have a calculator that can calculate the interest cost. A $38 trillion deficit at 5%. A 1% change, that's over that becomes 3.5, 1%, let's do that, 38 million by 1% is 380,000. So a $38 trillion deficit, that's $3.8 trillion in interest. $3.8 trillion in interest per year on a $38 trillion deficit, which is growing rapidly. It's over, folks. It's all done. We're at the absolute end of what we can do financially. This all started, well, if you want to do some historical things, you could go back to a bunch of different places, but it started in 2008 when the central banks around the world all got together and started printing money. That was the solution to try to get us out of that. So money came into the market. Money became free. So then all of a sudden there was all this economic growth, all this fictitious economic growth all around the globe. But now we're seeing that all of the inflationary factors, oil is now, the price of a barrel of oil is coming down. It's $80 today. It was 85. Because the thought process is, hey, the economy is going to be sinking really, really rapidly and nobody's going to be driving any longer. So we should see the price of a barrel of oil come down. But we're cutting supply all around the globe. So the price of oil should be going up, which is what it's been doing historically lately. Now, right now, oil is taking a little bit of a breather. We don't know whether that's going to come back, but Canadian inflation was just posted at 3.7% for the year, 3.7%. The average American in 2 years, so get this data, the average American in the last 2 years has seen their monthly cost, the average monthly cost, go up by $708 a month from 2 years ago. $708 a month more from a cost of living perspective, $708 the average American. Now, the other piece of data that was just published today too is homelessness in the United States has increased by 11% year over year. 11%, the largest increase in homelessness in the United States of America ever recorded. And yet we have an open border with billions of immigrants crossing our border, taking all of those low-paying jobs away. That's why homelessness is becoming a massive problem, and the government's response to that is, let's go ahead and house all the illegal aliens and spend billions of dollars that we don't have to do that, and let all of the Americans go homeless and freeze to death this winter. It's not our problem, it's somebody else's problem. The government of the United States of America has stopped functioning, and that's also part of what's causing this economic malaise. When a government stops functioning, there's no rhyme or reason to it. There's no reason to invest in that country. And you're starting to see that. You're seeing the weakness of the United States of America come into the US stock market finally. And in my view, it is not good. Now, housing, the city of Windsor. Is there any impact on the city of Windsor? There will be, sure. But Windsor will monitor and survive the storm that's coming to the rest of the globe. This is going to get very ugly. Mark my words, this is going to get very ugly. I hope that you're positioning as best as you possibly can. I hope that while times were good, you've been getting out of debt. I hope that you've been paying attention. But it's been so hard. It's been so difficult because money has been so free. Oh, gee, Brian, interest rates are only 2%. And according to the bank, I qualify for $1 million house. I can't wait to go out and buy $1 million house. Well, guess what? You better be selling that $1 million house right now and downsizing to a $600,000 house to be able to lower your total debt levels, because now is the time to be doing that. These things are going to become rough all across the globe. It is not a good time to be an investor. If you have extra money available, please, 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 I've done many videos on this, please consider putting that money into a protected product here in Canada. In Canada, we have protected product that the United States doesn't have. We have things called segregated funds. We have things called GICs and GIAs, guaranteed investment accounts. So I don't know if I would be a GIA fan. I've never been a huge fan of GIAs. I am definitely a fan in today's market of GICs. You're getting a 5% rate of return. It's a risk-free rate of return generally. And it would be really bad if your GIC ended up going negative. That would be a terrible time for all of humanity. It would be depressionary. So I don't see that happening at all. I see a very strong recession coming, and I see that Windsor is going to be bucking that trend to some degree and not hurt as bad as other communities like, Peterborough. You got some really bad days coming in front of you. There just isn't anything to be able to support you up there. And so get ready, folks. This is not going to be very good. From my own positioning, I'm actually in pretty good shape. I do have 200 shares short at this point in time that are gaining every day in value. They're being kind of constrained by this market right now, but I believe that the time for my shorts is coming. I believe that my shorts will be running. I do have a loss in my shorts right now, to be totally honest with you, but I've never sold them because I believe now is the time for those shorts to start running. I'm looking at shorting things like credit cards. I'm looking at shorting things like industrials now. I don't know if I'm going to pull the trigger and do very much shorting because, to be honest with you, I don't really have that much money in that account. I've gotten out of debt. Cars are paid for. House is paid for, all of that, because when times were good, that's what I was doing. And luckily in my business positioning is very, very strong. I just sold another house today to be able to hit where I needed to be from a positioning perspective. I want to end up being about $120,000 by the end of the year. In my business account, because that will end up insulating it very well from the tough times that are going to be coming. I don't see the real estate market in the city of Windsor becoming too tough, but having enough cash position to be able to muddle through and expand when everybody else is contracting. And that's what I've been doing. My estates business, when I get back from this short little trip, I've got 3 estates to have to clear out starting on Monday. So my estates business and the expansion of that estates business and the investment in that estates business is now paid up. And now it's starting to show revenue increases from the cost to get it launched. And everybody continuously dies. So it's just a matter of time until there's more real estate transactions in the estates business. My group benefits business will be shrinking because there'll be less employees at some point in time. You're going to have companies coming back and saying we're cutting 500 people, Brian. We no longer need benefits for those 500 people. So that will impact that benefits business. All of a sudden, my life insurance business is just taken off. Without doing anything. I've got 5 cases on the go. When I get back from vacation, I've got a confirmation of 3 more cases actually, and the possibility of 2 more. So a possibility of 5 when I get back, which is just unheard of as well too in my insurance business. Never had that many cases on the go at a certain time. We'll see what happens with all of that when I get back from this short little trip. But I hope that you've positioned your business in a pretty good spot and have been investing hard and getting out of debt. I hope that you've been doing that. I just don't know where we're going to 3 years from now. We'll have to see where we're at. I believe that there is some very difficult times in front of us. I believe that the 2008 financial crisis is finally starting to ring its bell. We've pushed it off and pushed it off and pushed it off with sucky economic policy that has simply put a Band-Aid over the problem, and now the blood is spurting again around the Band-Aid. Maybe governments can come together and figure something out on this one, but the damage in China, the second largest economy on the globe, is massive, and we're just starting to see the ramifications of the Chinese problem as it's starting to slowly leave China again, just like COVID did. And as we know, it killed 65 million people. An economic malaise coming out of China, which is where it's coming from, and boiling over, could end up, killing 65,000 of the Dow, in essence. Just be careful. Get out of debt, start building up some risk-free assets, some money sitting on the side in GICs. It's the best place to be with that money right now. Thanks for watching. Have a great day. Bye-bye.